Hello guys, and welcome back to the channel again. 21 here. So today will be a very important video that I'm going to do in my channel, maybe the most important one, which will be directly an explanation or a first source of my models and my standard deviations, my personal STDV that I use every day to bottom and top check the market and get perfect entries and exits. So jumping directly into it, when we speak about standard deviations, there is some words and concepts related to it that we need to mention. For example, a manipulation leg. A manipulation leg is basically the leg that we mark out the standard deviations from. We have the SMT2 that I use usually with standard deviations in my personal model. We have the levels of entry and the levels of exit. How do we mark them out using standard deviations? And we have the breaker block. You might see this one as the imposter or the weirdest one, but the breaker block, as ICT himself said many times, that the breaker block is one, if not the most important and strong PD array that he has out of all his concepts. So this is our compilation of concepts that we're gonna see today, and starting by the levels that I use personally. So what I use, you can screenshot them or just hear me and write them somewhere or just apply them in the chart. I use the 1.5 and 0 to mark out the manipulation leg and the breaker blocks. And I use the -1. The -1, its main function is usually that it confirms if you marked out your levels correctly or not. Because in majority of cases, the -1 usually gives a reaction. Either whether it sends the price back to the breaker block of the PD array, so the price retraces a little. Let me show you like this. So basically this is our market from here. Usually price comes here, reacts a little, maybe retraces here to a sort of PD array, and then comes back and breaks this level, then retraces, taps into it, and then dumps again. This is just an example. But we usually use it just to know if we marked out our levels correctly or no. So basically this is the function of the -1. I advise you to always pay attention to this level, because sometimes it gives a very strong reaction, even a reversal, but it's very rarely that it gives a reversal. It usually gives just a retracement to a PD array. And we have our most important zone, that is the -2 to the -2.5, including the -2.25. So this one is the catch. This one is my main level or zone that I use every day in my trading. One of the functions of this zone is that it gives perfect exits. It marks out a very strong reaction zone that we can expect price to reverse or to give a strong reaction from it. So basically, when the market reaches this exact zone, from the -2 to the -2.5, it usually have 50% of chances whether it gives a strong reaction and flips the whole market and gives an explosive move towards the origin of the move, which is marked by the number 1, or it usually marks out a range of markets before breaking it down and continuing to the last zone of my levels, which is the -3.5 to the -4 that I call the terminus. So basically the -3.5 and the -4 is the terminus of my trades. If I'm usually in a trade, the max that I can hold for is the -3.5 to the -4, because after that, if price breaks away from the -4 and keeps dumping, in this case, in case of a bearish market, this means that market is just so strong from the bearish side. So the bears are very, very, very strong and dominant in the market. But this zone usually is marked out with a range and then some retracements, and then it breaks down and comes back. So basically it isn't safe at all to hold below this zone. But the majority of my trades that I take, I usually cut the big half of my trades in this zone between the -2 and the -2.5. So this is the levels that I use. We have the 1.5 and 0 to mark out the manipulation leg. We have the -1 to confirm if we traced our standard deviations correctly. And we have our major and important principal zone, that is the -2 to the -2.5, where if you're okay with a2 to and or 3 RR trade, you can just cut your trade in this zone and be safe, because after this zone you never know what the market will do. Or if you want a higher RR, please just take some portions in this zone. One more thing about these levels is that the -2 to the -2.5 mark out usually those explosive moves at the opposite direction. So basically, if you're in a trade here, just like this market is acting like this, if the -2 to the -2.5 is the zone that market is gonna revert from, it's usually gonna be so fast, just like this. In a matter of minutes, like less than 10 minutes, market is gonna reverse and take the opposite side, which is market by the one. Or as I call it, I like to call it the origin of the move. So these are my personal levels. Now let's see an example of a chart and one of my personal models that I trade every day. So what we have here, we have market creating price action, and then here we have an SMT or a stop hand in a higher time frame PD array. So basically, when I mark out my standard deviations and my manipulation leg, I mark it out by an SMT or a stop hand in a higher time frame PD array. And I'm gonna show you in a different video, in a separate video, how to mark out your manipulation legs correctly. Notice, please focus with me on this model. You should have an SMT or a stop hand in a higher time frame PD array. In order to have a correct manipulation leg, you have to have one of these two. It's a necessity. This is not just optional. Now let's say you found your SMT and your stop hand in a higher time frame PD array. Now you have to wait for market to break structure to the opposite side. For example, here you can see we're in a trending bullish market, but at this exact point here, you can see that we broke structure and we flipped bearish, or as you ICC traders say, a market structure shift. Now that we have these two conditions, that we have an SMT or a stop hand in a higher time frame PD array, and we have a market structure shift, now we're gonna mark out our breaker block. And we're gonna mark out the breaker block from the body and the wick. The wick is very, very important, guys, please. The market have to close below the wick too, not just the body. And then after the market closes below the wick, you mark out your breaker block, and then mark out your standard deviations from here, from the top of the manipulation leg to the low of the manipulation leg, or the low of the breaker block. Just like this. It's already marked here. After this, you're gonna wait for a retracement to your breaker block. You may take this trades from a different PD array, but as I said, it's my personal model and I like the breaker blocks in this case. So you're gonna put your position here and then put your first target at the -2, your second target at the -2.5, and then the last one in this zone. One thing that I forgot to mention is whenever you're drawing your standard deviations, please pay attention if one of these zones, either the -2 to the -2.5 or the -3.5 to the -4, correlates with a prior low in the market. So for example, let's say the market started from here. What the fuck is this shit, man? Wait, let's say the market started from this zone. So we have, let's say, a low here. So in this case, in this particular case, what I personally do is I take half of my trade, I take partials at this zone and then hold the rest till this market low or this market target that correlates with one of my zones. Now this is for the first trade. Now let's say market didn't continue to this low and gave a strong reaction from this zone. In this case, you have to either find an SMT at this zone. In the -2 to the -2.5, you have to find an SMT here and then wait for market to break structure again like this and retraces, and then you ride with it directly to the origin of the move. Or what I do sometimes, if I don't see any SMT or any sign of market is reversing from this zone, it just came all of a sudden and the market started pushing, I wait to see the power and the strength of this reversal. If it started breaking highs very quickly, I wait for a very small retracement to a fair value gap. The first retracement that I see, for example here, I take it and I push my stop just 5 points below my entry, or it depending on the market volatility. So basically just a very small stop and I ride with it, because I know for a fact that market, if it started reversing very fast from one of these zones, especially the -2 to the -2.5, it's not going to retrace a deep retracement. So I have to ride with it and take a continuation trade. Now this is enough sauce for this video. I'll just finish it with some examples. One of, I guess, last Friday, this is MNQ by the way. Last Friday we had this SMT on the 5 minute. As you can see here, this is the SMT. My breaker block is this one, this 3 consecutive black candles that I'm marking out with this orange box. And then I came and marked out my standard deviations from this high, from the high of the move, the high of the SMT, till the low or the low of the breaker block. Both are correct. But I usually take just the same color candles in the manipulation leg. And then you can see here that market, we have the conditions that I said. We have the SMT, the break in market structure just here, and then the retracement to the breaker block, which is here. Our stop will be here. Our TP will be the first one at the -2. So it's approximately 2 RR trade, not a really big one. But you can see here that our levels were correct. You can see here the -1 gave this reaction, this crazy reaction from here. Another retracement and the stop hand in this breaker block, and then gave this dump till our first target, which is the -2 here. And you can see here the beauty of standard deviations from this exact level, which is the -2 of our deviations. I'm not much of a top or bottom seeker that who takes random levels. Every time market hits a level, I don't take a trade from there, but I usually, what I do is I go down to the 1 minute and try to find something to ride with here. for example, after seeing this crazy push, are probably just take the first fair value gap here, which might stop in the fair value gap down, and my TP at the origin of the move, which will be this one, and this will result in a 4RR trade. So this is the first example. As my second, this video will be long, but it's very educational and informative. Now let's go to my Twitter. You can see here the date. It was May 12th, 2026. This is the 4-hour chart, by the way. I had this manipulation leg here, marked my standard deviations, and it gave me this zone where market already tapped the first time in this order block, this 4-hour order block, and then came again and swept this low in this higher time frame for the array and left this crazy wick as a very bullish reaction. Let me show you what actually happened after that. This is the 4-hour chart. And this is our trade. You can see here, this is our order block. This is our deviations. Yeah, this is our deviations. And this is the reaction. And you can see that we flipped right till the origin of the move. And I already called it here. You can read here, I'm bullish on NQ for the rest of the week. My confluences for this narrative were a higher time frame stop hand and standard deviations. I said all-time high next, and boom, we already hit it in just the next day or the next 2 days. As my last example, I'm gonna give you this trade that I shared on my Twitter too in June 2, 2026. You can see here that I had this SMT on the 5-minute. I marked out my standard deviations and my left side of the curve and right side of the curve and my levels, and here it was the 2.25 level that gave this reaction, this very strong bullish reaction, and flipped till all-time high. So guys, hope you enjoyed today. This is enough sauce for today. There is a lot more to break down with you. I know this might seem like a lot and might seem like there is you might have a lot of questions in your mind, but please just stick with me around and I'll keep pushing these videos for you until there is no mystery anymore about standard deviations. Thank you guys. It was 21 here and have a great day.